Welcome to the Square Exchange community. In this lesson, we will be talking about the importance of support and resistance levels. Support and resistance levels are important topics to understand the basics of technical analysis. These play a vital role in analyzing chart patterns irrespective of the time frame. These lines are used by traders to mark price levels which might act as barriers and will prevent the stock from moving in a certain direction. Before jumping into drawing and evaluating support and resistance lines, I would like you to have a greater conceptual understanding of these levels. Support lines are drawn where a downtrend is expected to pause due to concentration of demand. This enables the trader to count on the historical performance of the stock to expect a pullback once the stock hits the support line. Whereas resistance lines are drawn where an uptrend is expected to pause due to concentration of supply. This enables a trader to rely on historical pivot highs and expect the price to consolidate or pull back once it hits the resistance line. Support and resistance lines can be drawn manually. Creating and analyzing support and resistance lines is very crucial as these lines help traders identify the areas which serve as potential entry and exit points in a specific time frame. We will now take a couple of examples to learn how to draw and evaluate these support and resistance levels across various stocks. Jumping into the topic, I would like everyone to know that I will be using the TradingView platform for all the implementation of technical indicators and strategies. Support lines are created by analyzing the pivot lows that have been hit repeatedly in the past, as they can enable the stock to gain support and shoot up from there. Whereas resistance lines are created by analyzing the pivot highs that have been repeatedly hit in the past, as they can indicate the inability of the stock to break through that level and eventually signal a bearish reversal. As you can see in this specific example of a one-day time frame of Berkshire Hathaway, we can see that the stock used the price level of somewhere between $198 to around $195 as a support level for a good 6 to 8 months. And at the same time, the price levels between $217 and $215 acted as major resistance levels. What we can see here is that each time the price hit the support levels, it gave a good buying opportunity, and each time it hit the resistance levels, it gave potential exit points. However, at the end of this cycle, we could see that the stock simply broke through the resistance levels to reach new pivotal highs. This example also opens up the opportunity to discuss the role reversal of support and resistance levels once the stock has broken through them. As we can clearly see in this region, the previous resistance levels between $217 and $215 ended up acting like the new support levels for the stock. What this actually means is that once the stock breaks through the resistance level, it can use the same level as support in order to shoot up. And we can clearly see that exactly the same thing happened. As the price shot up through the resistance level, it took its support to shoot up even higher and be a very profitable trade for the swing traders. And if we take the example of historical support lines, we can clearly see that after this long bearish trend, the historical support lines started to act as the new resistance lines. And if you would like, we can create a good support, a good and strong support level around this region, which has been formidable enough for the price to pull back from there and give a good bullish trend. So as I was saying, that the new resistance levels around this area have been formulated from the historical support levels, which brings forward an important articulation of the fact that the biggest quality that the stock market has is the historical quality. The price will always hit the same levels again and again, and that is something that we as swing traders can capitalize on. In the daily time frame for Tyson Foods as well, we can see that the stock finds strong support levels in the region of $78 to $75 and corresponding resistance levels in the price range of say $94 to $92. Again, giving a good trend of around $12 to $14 for an intelligent trader. Furthermore, if we look at the more recent trend for Tyson Foods, we can see that the stock is again finding support in the price range of around $54 to $52 and and somewhat a strong resistance level around the price range of 65 to $63, giving another opportunity to realize profits around $10 to $11 by simply using the support and resistance lines as technical indicators. With that being said, this also brings forward an important understanding of the fact that support and resistance levels are highly effective and reliable indicators on larger time frames, like on daily, weekly, and even monthly charts. Because the larger the time frame and the more number of times the stock pullbacks from a support and resistance level, it simply enables us to know that that is going to act as a pivotal point in the future as well. Well, that's all we have on support and resistance levels for now, and we will be back soon with more content. Thank you for watching.
Check out our website and other social media platforms to learn more about our financial services.